Wall Street closed yesterday with a massive sell-off of risky assets. In the light of strong data on the business activity, traders had to revise the prospects of a further monetary tightening. Besides, weak forecast by US retailers worsened the overall picture. Today, investors are anticipating a batch of important events. Tuesday has been the worst day for Wall Street this year. The benchmark stock indexes tumbled by more than 2% as investors viewed a recovery in the US business activity as a harbinger to more aggressive tightening by the US Fed. The three major indexes closed with sharp losses yesterday. The Dow Jones slumped almost 700 points, or 2.06%. The Nasdaq plummeted by 2.5%. The S&P 500 lost 2% to close at 3,997 points. Wall Street indexes opened today with a minor retracement. They rebounded by 0.12 and 0.36%. And today the stock market is set to trade with a higher volatility on the back of the Fed's minutes and a series of corporate reports. The S&P 500 is expected to trade in the corridor between 3,940 and 4,090 points. The S&P 500 and the Nasdaq went down by the third session in a row, and the Dow Jones erased all its gains of 2023. The slump was triggered by the S&P Global PMI, and the US business activity expanded in February for the first time in 8 months. The PMI jumped to 50.2 from 46.8 in January and was supported by steady growth in the services sector. This survey complements the recent bunch of economic data which painted the picture of a healthy economy despite a cycle of rate hikes launched by the US Central Bank in 2022. As inflation is still far away from the Fed's target level of 2% and the economy maintains momentum, market participants are now pricing the ultimate size of the funds rate at 5.35% in July. The stocks of the high-tech giants, including Tesla, Amazon, Microsoft, and Alphabet, suffered from the sell-offs on Tuesday. The shares of chip manufacturers dropped by 3.3% intraday. Shares of Home Depot plunged by 7.1% to a 3-month low after the home appliances retailer warned about a weak demand and presented a gloomy revenue forecast for 2023. Walmart also predicts an annual profit lower than the Wall Street consensus because higher than expected inflation dents profits. Nevertheless, shares of the huge retailer grew by 0.6%. All 11 sectors in the S&P 500 went down. And today, traders are focused on the minutes of the Fed's last policy meeting. Following the publication, New York Fed President John Williams is due to speak. Market participants are eager to gain insight into the debates among Fed's voting members on how long the central bank should raise interest rates to curb inflation and cool down the economy, which has proven to be more resilient than expected. At the last Fed's meeting on February 1, this rate-setting committee increased the federal funds rate by 25 basis points, thus moderating the pace of rate hikes. The minutes might shed light on how many Fed officials advocate for the hawkish rhetoric. That meeting was the last one for Fed Vice President Lael Brainard, one of the most influential those advocating for a cautious approach. Last year, inflation in the United States accelerated to the highest rate in 40 years, but Fed's policymakers were on the same page about the policy moves. Now they have a broader field for discussions. Curiously, the minutes are out of date as the meeting took place before the publication of the non-farm payrolls and inflation data, so investors will give priority to a speech by John Williams. As for corporate news, consulting firm McKinsey & Company is planning to fire nearly 2,000 employees. The company explains that it will fire supporting personnel who are not directly involved in serving clients. Tesla began assembly of battery systems on its facility in Germany, but cells will be manufactured in the US because of a tax incentives. Nvidia is due to report on its quarterly earnings. The market is aware that Microsoft had made a 10-year agreement to transfer Call of Duty and other video games to Nvidia's gaming platform. The reported forecast could give a fresh impetus to the high-tech sector. Coinbase Global reported to its losses in the fourth quarter because the trading volume of the crypto exchange was squeezed by a series of large-scale bankruptcies. Later today, eBay, NetApp and ATSA will report on their financial records. The US dollar index is trading mainly flat within the range of 103.80 to 104.20, and the index is trading at about 104.10 at the time of recording this video. The intraday corridor for the instrument is seen within a right range of 103.5 to 104.7 because the Fed's minutes could set the market in motion. The US dollar is hovering at around the 6 months high on the back of a strong economic data. The survey on the business activity showed that the US composite PMI unexpectedly recovered in February to stand at the highest level in 8 months. The Eurozone's composite PMI also surged to a 9-month high. From now on, investors are shifting focus to the Fed's minutes to gain an insight into the agenda for further rate hikes. The United States dollar owes its strength in the last 3 weeks to the upbeat macroeconomic data which assures the Fed to tighten its rhetoric and move on to sharper rate increases. Investors predict that the official funds rate will peak at 5.35% in July, whereas they projected the ultimate size at the level slightly below 5%. Traders have already spotted the subdued advance of the greenback, and its index gives a moderate response to the hot economic data. The reason could be that the cycle of monetary tightening is approaching its end soon. Today, the US dollar is sure to gain momentum, which could be bullish or bearish, depending on the Fed's debates. The Canadian dollar is trying to stabilize after its drop from a 1.3550 following a 0.05% downtick, and the USD card pair is now trading at 1.3530. The instrument is expected to trade in the intraday corridor between 1.3490 and 1.3570. The loonie turned sour after inflation data released on Tuesday. Canada's annual CPI fell lower than expected to 5.9%. Analysts had projected the CPI to slip to 6.1% in January from a 6.3% in December. The CPI grew by 0.5% on months, again below the forecast of a 0.7% rise. Such inflation rates allow the Bank of Canada to put interest rates on a halt in March, despite the overheated labor market in January. Before the publication of the inflation data, market participants predicted a 100% chance of another rate hike this year in the light of the hawkish rhetoric of the monetary authorities last week. Now the chance measures 80%. The Bank of Canada predicts that inflation will fall to roughly 3% by mid 2023 and decline to 2% next year. The next inflation report will be posted after the policy meeting on March 8. Apart from easing inflationary pressure and a potential softening of monetary policy, the loonie is wound down by a slump in oil prices. Crude oil has been trading lower for 3 sessions straight. Brent futures skidded by 0.8% to trade at $82.29 a barrel, and WTI futures dropped by 0.8%. Morgan Stanley upgraded its forecast of oil demand for this year to 1.9 million barrels per day from 1.4 million barrels in the previous forecast. On the flip side, it downgraded the forecast of a Brent price for July-December. As for the crypto market, Bitcoin dipped to 23,900 intraday, but rebounded by opening bell. At the time of recording this video, the token is trading at $24,100. Ethereum is trading flat, Solana, Ripple and Litecoin are gaining ground, and the crypto market is trading under high volatility ahead of the Fed's minutes. The New York State Department of Financial Services announced the expansion of its power in detecting illegal activities, including insider trading and market manipulations. The largest crypto exchange, Coinbase, reported its losses in the fourth quarter because the trading volume of the platform was affected by the overall industry downturn. Last year, the crypto market was badly bruised by global risk aversion, but the most painful blow was delivered by the bankruptcy of FTX run by Sam Bankman-Fried. Coinbase's net revenue amounted to $605 million less in the previous quarter, steeply down from $2.49 billion a year ago. The company reported net losses of $557 million following a net profit worth $840 million a year ago. Bitcoin has settled in a new trading range of $23,900 to $24,500. Bad news could make the token break the lower border. If so, the next support will be found at $23,200, and the best case scenario is a recovery to $24,500 and $25,200. Good luck in your trading and see you online tomorrow.